wine. People sure love to drink it. But did you know that fine wine as an investment has outperformed global markets this year? To talk more about what's behind the solid returns is Atul Tiwari. He's Chief Executive Officer of Cult Wines Americas, a fine wine collector and investment management firm. Hi, Atul.
Hi, Saijal. Great to see you again. How are
Great
you?
to see you. It's interesting because this is coming at a time when investors are trying to find a place to hide from this broad market sell-off, and fine wine has done pretty well. Tell us about that. And I will bring up a chart, Atul, that shows the performance. But what's behind this?
Yeah, thank you for the question. And you're right. Times are very volatile. Um, Fine wine is doing exactly what it should in these times as a diversifier of portfolios. So fine wine has been shown historically to have low correlations to equities and bonds, low volatility, and what we call low downside capture. So that means if equities go down a lot, wine doesn't go down nearly as much. Um, and what we're seeing year to date, in fact, is that fine wine is increasing. So year to date, returns have been over 14% for the LiveX 1000 index versus, as you point out, S&P 500 down about 18%, gold down 9%. So wine is doing what it should and is also acting as a good hedge for portfolios against these inflationary times that we're seeing.
Yeah, Jill, we had a guest on earlier, Jeff Shell, talking about alternatives, and he said one of the reasons for that is, and especially with collectibles and sort of these private asset classes, is that it's not getting swept away with the market sentiment. Is that what's partly behind the low correlation?
Yeah, that is one of them. The thing about fine wine is it's inherently driven by supply and demand, and so every year there's only a finite amount of investment grade wine that's produced around the world. And with demand staying where it is, and we've seen it stay, in fact, grow over the last few years, there are more individuals, whether they're collectors or consumers or investors chasing that finite amount of wine around the world. And so that insulates the fine wine market to some degree from what we're seeing in the equity markets. In addition, it's a pretty fragmented space. And so you don't have very large institutions or millions of retail investors kind of in and out. The investors in fine wine tend to be people who really do have a long-term view. And when markets do go down, wine is not the first thing that they would think of selling in order to meet cash flow needs, for example.
So, what's your outlook then for fine wine? And you know, when you talk about the supply dynamics and the demand dynamics, what's going to drive it going forward?
Right. A number of factors. As I've mentioned, we're seeing demand increase around the world. We're also seeing more acceptability to pick up on Jeff's comments about alts. There's more acceptability of alts in the retail space as many investors learn that there are some real advantages to alternatives in their portfolios. And as you know, and we know, pensions and other smart investors have been in alts for years. The thing is now they're becoming more accessible, which is great. Um, the other thing is climate change. You know, regardless of what's happening, the amount of fine wine produced in certain regions every year decreases depending on what we see in the climate. And so, if you get early frosts or wildfires or floods in wine producing regions, that may limit the amount of supply coming onto the market. So, to answer your question, we see fine wine continuing to appreciate in value. We think that some of the gains that we've seen over the last 2 years will moderate so that last year there was a 21% return. This year we're on a really good pace. So we expect to see that continue, but there may be some moderation.
Okay. And we only have 15 seconds to the break. Is China still a strong consumer given what's going on there?
Definitely. And what we're seeing is the Chinese appetite for wine, whether it's for investing or consuming, is broadening out. In the past, it was heavily concentrated in Bordeaux, but we're seeing a lot more interest in Burgundy and Italy.
Welcome back. I'm here with Atul Tiwari, and we've been talking about investing in fine wine. Atul, are certain regions and segments doing better than others, and why? You can explain that.
Yes, Saijal. In fact, just like any other investment, we preach diversification. So you don't want to put all of your bets on one particular region. And so we have an investment committee that sets a benchmark allocation across different fine wine producing regions. So when you look at returns, um, last year, for example, the leading region, the leading sub-index was Champagne, and it was up 41%. The second region was Burgundy, which was up 31% last year. But you can then go down to other regions, like, for example, Rhone, where returns were probably more in the 4 to 5% range. So you do want to make sure that your portfolio is diversified so that you can, when certain regions are firing, other ones may not be, and you'll still get a decent return.
Yeah. So explain champagne because you said last year it did very well. How is it this year, and what's changed in terms of dynamics, supply demand, or weather, or whatever it may be?
Yeah, sure. Yeah, Champagne, we saw quite an upswing through the pandemic period. Initially, the producers in Champagne thought people wouldn't want to pop a bottle of champagne while they're sitting at home in lockdown. But as it turned out, more people did, in fact, decide, look, I'm not going to save this for Christmas or my birthday. I'm going to drink it on Wednesday night. And so that combined with supply chain dynamics and adverse weather in Champagne in 2021 resulted in a supply crunch. And we saw the dramatic increase in the Champagne subindex last year, 41%. But we're continuing to see that happen this year. So demand is up. Champagne has really taken a foothold. We're seeing growth in rosé champagne, what are called grower champagnes. These are smaller production compared to the ones that most people see on the shelves, like Veuve Clicquot and others. And so this year, Champagne's performing quite well again. The number one returner is Burgundy at about 28% year to date, and Champagne's close behind at 24% year to date. So both regions have been doing extremely well.
Okay. So, a tool for retail investors that are probably watching this, they want to invest in wine and your company, presumably. Where do they start, and what's the minimum investment if you could go through that?
Right. Yeah. So we're all about making fine wine investment more accessible. I mean, in the past, it had been available to the privileged few, but we want to expand that and democratize it. So we have an offer that starts at $12,500. That's the entry level for a portfolio of wine, and we do match you with actual wine, so you own it. It's segregated, and we manage it for you. The reason we're at the level we're at is we what I just talked about, which is diversification. And we believe to get a properly diversified starting core portfolio, it's in and around the range of $12,500.
Okay, and can they pick different portfolios based on their risk tolerance or time horizon?
Yeah, absolutely. So what we do is when a client comes to us, we will do the know your client. We'll understand our client's objectives, duration, risk profile, and then we'll go away and match a portfolio of wine to hopefully achieve the objectives that our client is looking to attain.
Okay. Atul, you were on last in January. How has business been? How are your flows?
Great. Well, as I mentioned, in these volatile times, we're actually seeing a lot of interest in fine wine due to its diversification benefits. So we're having a really good year. In terms of new assets, we're now up over 400 million. I think when we talked, we were probably in around 300. And we're seeing new assets growing at about 60% plus year over year. Our new client base has increased by 20% year over year.
Yeah.
So overall, these volatile times have really helped us in terms of having investors understand the
Okay.
merits of fine
Atul,
wine.
thanks for coming on today. Really appreciate it.
Thank you, Sajal, and thanks to everyone who's watching.
Well, that wraps up this edition of Strictly Money. Thanks for watching.